Obviously, you've had a name change recently from Rubicon. I don't want to get into all of that, what's gone on in the past. I think it's well documented, well covered, and we've put some links that if people are determined to know more. I'm interested in you. I want to know what I'm buying into. So you arrived in 2016, inherited a bit of a situation there with what had gone on. You came as a consultant first, and before becoming CEO. What was it that you were brought in to try and fix?
Well, prior to joining Battle North Gold, I conducted 4 months of my own due diligence on the project. So I signed a CA, I went into the data room, I visited site, tried to get a sense of what had gone wrong in the past and how could it be fixed and what the potential upside was. And, I did see a lot of things that did go wrong, and I knew that I had the technical skill to fix them. So, what we've been trying to do over the last several years is really de-risk the project from a technical perspective. We've been 3.5 years at this, and I believe we're very close to showing the market through a feasibility study that we do have a commercially and economically viable mine. And I sort of realized 3.5 years ago, we didn't need 3 million ounces in the ground at 10 grams. Given all the sunk cost, given the $690 million of tax loss pools, a sort of 1.5 to maybe 2 million ounce resource deposit, 6 to 7 grams would probably be enough to actually be a commercially viable mine in a $1,200-1,300 US gold price environment. And of course, successful business is all about timing. Sometimes you need a little bit of good fortune. And I would certainly say we're now coming into a very bullish gold price environment. And what a wonderful time to be bringing a mine into production and operating it over the next 4 to 5 years, where I think we're going to see very robust gold prices.
That's true, but let me stay with the kind of, you're a mining engineer, you might understand why I want to get into the weeds of it with you. I'm trying to understand about why you're the best guy for it. You kind of came in with a clean sheet in a way. You didn't have the issues that perhaps the previous incumbent management team would have had. You were able to not worry about how you phrased things, how you said things. You said, I looked at this from a blank sheet of paper, trying to understand what the moving parts were, and my view is the previous business model didn't need to be structured like that. We could come at this a different way, and yes, timing's on your side, but how did you get the company, or was there very little resistance, to move from previous model to new model?
Well, first of all, we had to get a geological structural model that was sound, and although there was 500,000 meters of historical drilling conducted on the project, none of that drilling was what's known as orientated core. So all the drilling that we've did over the last 3.5 years, which is in excess of 100,000 meters of additional drilling now, has all been orientated core. And the way your sort of listeners and viewers should think about that, think of it like a clock face on the wall. And the analogy I always use is, if there were no numbers on the clock and no distinguishing features, how would you be able to tell the time? So with orientated core, when you remove the core from the barrel of the drill, in 3-dimensional space how that core is orientated. So you sort of know where 12, 3, 6, and 9 o'clock is located. When you bring the core to surface and you put it on the geologist's bench, and he has 12 o'clock facing up, as he measures the dip and the azimuth and the strike of the quartz veins, which typically carry the gold mineralization, he can put that into the computer, and because we know how the core is orientated, we can see trends developing. So we could see where that gold could be contained within other elevations within the mine. And for this project, we saw 3 trends emerging with respect to the strike and the dip of the mineralization. So the veins run east-west, which is actually perpendicular to the main host rock, which is a high titanium basalt, which runs north-south. But we also saw other veinlets running north-south and other veinlets running northwest-southeast. So this allowed us to hit upon what's known as a Rydell shear system. Now, it was all conceptualized, it was all theory, But that allowed us to put together a new structural model and a new 43101 in 2018. And then in the summer of that year, we took a 40,000 ton bulk sample out from underground, 5,000 tons of waste, given the mill hadn't ran for a couple of years, 5,000 tons of low-grade 3-gram material to bed the mill in because it had been cleaned out, so the mill will absorb gold, and then 30,000 tons approximately from 3 test trial mining stopes. Now, each one of those stopes was actually completely mined independently, and we took over 10,000 underground run-of-mine muck samples. And each stope was brought to surface separately and put into its own stockpile, and then ran through the mill individually. So we had the ability to actually do a reconciliation exercise right down to the very 10,000 ton stoping block. And from that exercise, we ended up getting 5,200 ounces of gold out compared to the 4,600 ounces of gold which the model predicted. So we were 7% higher on tons and 6% better on grade. And that amounted to almost 14% more gold out than what the model predicted. So that sort of gave us, in our opinion, some validation on the geological structural model and also on the 43101 resource that we put together and the various modeling parameters that we were actually using to construct the resource. And from that moment in time, we've put out an additional 3 updates to the 43101 resource, and we have not changed the modeling parameters. So the capping levels remain the same, the radii of influence remains the same, the resource methodology that we're deploying remains the same. So today we believe we have something which is fair, credible, and is a better reflection of what we actually have in the ground compared to maybe where the company was 5 years ago.